Ladies and gentlemen, this is the Insomnia Podcast live. I am your host, Javier Novoa, with the libertarian investor. And the world continues to go down a path of a change in cycle, ladies and gentlemen. A new cycle is coming, and no one really knows what's on the other side of that cycle. That's why it's a frightening time, but it's an exciting time. And while I'm not in agreement with how this is going down, I knew it had to happen in one form or the other. And we're going to show you videos in this podcast where I predicted the economic implications of this. And I believe that economics drives politics to a large extent. Geography drives politics to a large extent, but economics, I think, drives it to an even larger extent. It's all interrelated, but whatever the economic conclusion is, the logical economic conclusion is to a set of policies that have been going on for years, the geopolitics will catch up to that, unfortunately. And we have to go into a major recession in this time frame. And I think what's going on the world stage is simply an acquiescence to that. You're watching the Insomnia Podcast. We're going to talk about it more here today. As we see the remaking of the world order right before our eyes, ladies and gentlemen, we're going to discuss the economic implications, and more importantly, we're going to discuss what the implications are for your investment strategy. Who's going to come out ahead? Going to be the people with the best strategy. Oil hit $110 a barrel just a few moments ago. I and others on X have been predicting this for weeks, while professional money managers were saying that, oh, this is all just priced in and oil's not going to go up that much. Today it rose 20% in one day. I'm not sure if that's the greatest in history, but it's certainly an historic rise in oil. It was only higher than this in 2022 when it got to $118 a barrel, I believe. In just a few more days, we could be there. We could surpass it, ladies and gentlemen. Meaning what? Those invested in commodities are going to come out ahead. The Insomnia Podcast. The footage of conflicts, ladies and gentlemen. Welcome to the Insomnia Podcast. I am your host, Javier Novoa, with the Libertarian Investor, with the real Javier Novoa, wherever you're watching from, live from Dallas, Texas, guys. I welcome you to the podcast. And guys, as I said, oil has just crossed $110 a barrel. It's gone below that. We've been predicting this for a long time. And again, this is going to be the catalyst, if things remain as they are, of a recession. And of course, then that recession will invite inflation, because the inflationary measures that governments always use to combat recessions, because they can't simply allow everything to wash itself out. As I said before, we are in the unfolding cycle, or the debt unloading cycle, if you will, of the Hayekian business cycle. And that means that businesses unfortunately have to fail, prices have to fall, and people need to come back and pick up the pieces and build again, start more efficient businesses, and start producing things that consumers have actual demand for. Remember, demand is not just wanting something. Demand is actually having the resources and the allocation to buy that thing. So we've got to start having products and services that the consumer actually has demand for. And that's what this unwrapping of the debt cycle is all about. This war is just a catalyst for that. And like we said, oil is up to $110 a barrel. And I believe that is historic in the time frame in which it's risen, because in one day, oil has gone up 20%, and we've predicted this. And I just wanted to show you the videos from my channel where we actually predicted this recession, guys. And it was a few weeks ago when I predicted this. Here it is, guys, and it's because I saw a bunch of things closing near me, a bunch of stores closing near me, and also my knowledge of Austrian economics basically took me to this conclusion that, yes, very soon a recession is coming. And let me show you this video on my channel. I put this channel up so that I can have a timestamp, so that I can have a record of what I've said. to test my own accuracy for the purposes of investing, and then to show you that you can trust me because I've been studying these issues for over 20 years. So here's that video from a few months ago. Lots of walks around where I live. I go to stores. I just walk around parking lots. And today I took a walk through a parking lot that I frequent a lot for eating, for shopping, and so on. I just want you to take a look at what we saw here. That, of course, a bunch of stores had closed. And I walked around and showed those stores. One of my favorite sandwich shops had closed. We don't need to go over all that, but seeing things like this over and over again, especially in restaurants, and there have been a lot of documentaries of late. I've been talking about it for a while. The quality of restaurants, the quality of food. And again, if you study Mises, if you study Rothbard and the Austrian economists, you'll realize that inflation causes this. The rising prices causes businesses, of course, to see what corners they can cut, see how they can save costs while keeping the cost of their sales the same. And what, of course, you end up with is lower quality. I worked for restaurants years ago, and I remember one restaurant I worked at that kept cutting the quality of the meat, the quality of the cheese, and so on and so forth, different food. They eventually went out of business. But it was, of course, in an effort to save money. That's what this hyperinflationary atmosphere that we're in causes. And what I'm saying is, and I'm going to predict it here, and as much as you can predict anything, I think I'll give it a number. Here's the prediction. We'll put that on. And guys, remember, this was 1 month ago. It was more than 1 month ago. It was January 13th. It was almost 3 months ago when I predicted this. Let's listen. 70 to 80% that within this year, we are going to go into a major recession. Major recession. We're talking about layoffs. Of course, I talked about AI in the last video, and I don't think it's going to be catastrophic, but I do think beliefs about AI, and remember, AI trying to adopt AI to. We've seen all these job losses. A lot of them are being attributed to AI. I don't think it's all AI, but a lot of them have been attributed to AI. I said this almost a quarter ago, ladies and gentlemen. Replace humans. Although a lot of them are realizing they can't replace humans, but in the short term, the near term, they're going to try to replace humans, and that's going to cause some layoffs. Inflationary pressures, people not being able to afford basic needs are going to cause layoffs, and we're in for some hard times. And I just want to couple this firsthand experience with some data. I was just looking at some of the real world data over the last. But at any rate, we saw the data. You don't even really need the data now. All you need to know is that I said it at that time. So yes, ladies and gentlemen, we are headed for a recession, unfortunately. The question is, how are you going to benefit? And I think there's still time. Again, I'm not an investment advisor, so don't take any of this as advice. It's simply what I'm doing or what I would do. I'm not necessarily going to tell you exactly what I'm doing, but I'll tell you what I would do. Perhaps buy some oil stocks, buy some Oxy, because I don't think this is the end of the rise of oil. The Strait of Hormuz is now effectively closed. That's 25% of the world's oil supply. Countries are ramping back production because a lot of these Gulf countries that are unfortunately being caught up in this are now ramping down production. So you have a supply side crisis. And then you also have a crisis of perhaps lack of demand, which could be a counterbalancing factor. But all in all, we're seeing oil prices rise. And remember, again, when oil prices rise, that's the price of food, because a lot of this food has to be transported. That's the price of anything, by the way, that's made with plastics, because Plastics are a product of petroleum, so many prices right there will just rise. And of course, Austrians don't call this inflation. What we refer to as inflation is an increase in the money supply. So while prices will rise, what's going to happen is with Mr. Warsh now in the Fed, we're probably going to see cutting of interest rates, or whenever he gets in there, and even now, probably going to see cutting of interest rates. We're probably going to see the printing of new money. We're going to see the government propping up companies, trying to prop up zombie companies. We're going to see the government picking winners and losers. And so that is all going to cause inflationary pressures. And who knows how long this conflict is going to last. And what Ludwig von Mises talked about, the crack up boom, where things inflate so much and prices inflate so much, eventually no one can afford anything, and then the whole currency collapses. Then you can't get anything at any price. So there's a major deflation in that there's just no demand for anything. How do we set ourselves up to benefit from this? And I was thinking about a book that I have read years ago. It was actually recommended to me by my teacher, Gary North, one of my teachers in economics, Gary North. And this book is called Alpha Strategy, guys. And basically what this book talks about is, of course, we have to invest to increase our wealth. We have to invest in assets and commodities. We have to use computers to do it. We have to invest in funds. I mean, there's just no way around it. But remember, your money is never totally safe anywhere. Your money is never going to be totally safe in a fund. But where you know that your keys are safest is when they're with you. So the Alpha Strategy, basically, and here's this book, you can get it for free online, you can buy it. It was written years ago, I believe in the 80s, as from the standpoint of Austrian economics, but it talks about, it gives you a rundown of why all of these financial assets and paper assets are probably not that safe, but it tells you to invest in real things first. Of course, we need to have several tiers. I know that Gerald Peters was talking about that in one of his videos that we put on here earlier, that you have several tiers. Your first tier needs to be investing in real things. You need to have a place to stay. And I'm not necessarily saying that you have to buy a house. Perhaps now, again, I'm not an advisor, but perhaps now is not the best time to buy a house. Perhaps you want to wait and see if prices are going to drop, because I wouldn't make any huge financial decisions right now, especially if you have some money set aside. But the first tier is that you have to invest, again, in a place to live. You have to invest in things that you can use, whether that be tools, whether that be vehicles, and you need to invest in real assets like food, perhaps food storage, because we really don't know what's going to happen. And the uncertainty factor has just been multiplied by probably 10 or 20. So it's a great book, and basically it recommends that, and it gives you steps for how to do that, for how to solidify your life, because you have to have a tier where it doesn't matter if the financial system collapses. It doesn't matter if your 401k is inaccessible. That's another thing we want to talk about, because you look at this Blue Owl situation coming out of England, and then you see Blackstone and all of these other companies, credit, saying, well, maybe you won't be able to get your money out of your 401k. Maybe we'll only give you 5% and we'll take like 8 years to give you your money back. None of your money, if it's in any other institution, is 100% secure. So you have to have some assets, some basic goods that you can fall back on if, God forbid, your paper assets are wiped out. And again, that's another reason I like crypto, because it's relatively anonymous. Right now it is, until they get involved with it. And you can keep it more or less safe anonymously. Of course, if someone takes that now, there's hardly any recourse. So again, your best bet is physical things. And by the way, physical gold and silver. I was just in a silver shop gold and silver shop the other day, and their business is just booming, ladies and gentlemen. Many people are awake to this, and many people are buying physical gold and silver. It's another reason I think that gold and silver prices are deflated, frankly. They are being kept artificially low, again, by paper gold and silver. So it's a going back to real things. And Jim Rogers talked about this years ago. We've interviewed him many times on our channel, but Jim Rogers talked about the fact that you ought to have physical assets, and that we're going from a world of paper pushers to a world of real things, real physical assets. Even in the world of AI, and of course, AI is changing the game for everything, but what is AI based upon? It's these physical data centers. And so real estate is always going to be a thing. I said you don't necessarily need to own your own house. There's nothing wrong with purchasing property to rent out as an investment. That's always been a good strategy. So it's just the same old-fashioned advice. I think many of the investment advisors of the past talked about the 5 Gs. A few of those Gs is God, gold, ground, which is land, grub, things like this, and things that you can use again to enhance your own lifestyle. So focus on enhancing your lifestyle, focus on physical things, and then once you have that tier, once you have that base, then you can take the extra and get into these markets and see if we can get rich in these markets. And again, my move right now, my only move, I did this last week, was to buy Occidental Petroleum, and perhaps I will buy some of these ETFs in oil, because, ladies and gentlemen, if things keep going the way they are, and as the economists say, ceteris paribus, of course, the ceteris are never paribus, but all things being equal, oil could be at $200 in the next month or 2 months, guys. I'm not exaggerating. There's I think now 50-60% chance that we see $200 oil, $200 a barrel oil in the next month to 2 months. Unless there's some kind of underlying strategy here that I don't know about. I don't know if the powers that be have a strategy, frankly. It seems so self-destructive. You know, the economist Jeffrey Tucker on X, he posted a chart of gas prices, and these are the highest gas prices since early in the last administration. And he said, I can't believe that an administration would do this to itself. I don't know if there's rational thinking going on. I just know that we are in the age of expect anything. So it's time to go back to defensive investing again. Try to invest in real things. If you have money, I would get it in cash, and I would get it in precious metals, and I would get it in real things. Excuse me. It's that Texas cedar. I just want to show you a video that I put on X earlier. We've been posting a lot of things on X, and I would subscribe to my X channel at jnovoa85, the real Javier Novoa, because I put a lot of succinct observations on that channel. So let's go to a little quick break. I'm going to go to a break, and then we're going to come back. I'm going to show you some of the things I posted on X, and I'm going to tell you some of my ideas for coming into the next week for what you can do, again, to invest defensively besides this alpha strategy. So this alpha strategy is one tier, and it goes without saying. But what are the recommendations otherwise with any of the extra resources that you have you want to put into these markets? I'll tell you some of my ideas for that coming up on the Insomnia Podcast. Let's take a quick break, guys. Take a quick break. I will be right back in just a few moments. Insomnia Podcast. I'm back, guys, and just looking at X here, here's another little factor. Of course, this was 6 hours ago. This is before oil spike. Elon Musk says China is rapidly reducing dependence on oil. This is way bigger than you think. So, there are, of course, going to be contradictory factors going into the price, but I think long-term we do reduce a bit of dependence on oil. Of course, a lot of people don't know that for the electric vehicles, these refueling stations are being powered a lot by oil. So oil is still a major factor, and I think will be for many years to come. That's just a prediction, so take that with a grain of salt as it may. Tucker Carlson prayed that the spell break and the world is saved. Pray for peace, ladies and gentlemen, and meditate for peace, because, again, peace and prosperity is the best way forward for humanity. I'm your host, Javier Novoa. This is the Insomnia Podcast. And I just wanted to show you what I had posted earlier on X, because, again, it's like a little timestamp. And I talked about this before. And again, it's not because I know the trajectory of world events. It's not because I'm so smart, but it's because I have an education in economics. I have an education in investing. And so in order to simply be able to allocate my money, I have to know these things. And I have to be able to make rational predictions. And here's a video that I made just about 40 minutes ago when I saw that oil had gone up, guys, to 110 rather dollars a barrel. The libertarian investor here. As we speak, oil has hit $110 a barrel. It's up 20% in 24 hours. I think that is historic. I'm not sure. Subscribe to my X account, guys. JNovoa1985, the real Javier Novoa. Talk about these things every day. The last time that happened, we'll have to research it. In a few hours, I'm going to be going on an Insomnia Podcast. We're going to talk about what the implications of this are. More importantly, what's going to happen in the morning when the markets open. What are the implications of $110 oil? We could be quickly going into a recession, and of course the inflationary effects that happen when governments try to mitigate those recessions could come with that. So again, I'm just trying to figure out how to position myself as an investor in this, because not only are these very perilous times, they're very... How to position ourselves, guys. Remember, it's not what happens, it's what you do with the information. I think we can use this information to better our lives. Pavel Durov, by the way, Pavel Durov is the CEO of Telegram, and he is a great libertarian, very principled man. I would watch this video just because of the fact that it's about balancing the spiritual and the physical. It's about balancing meditation with hard work. In fact, let's play that clip, because why not? We're here, right? And I just love this philosophy of Pavel Durov. He's a great libertarian, guys. The embodiment of what it means to be an entrepreneur who cares about humanity. And here's part of his philosophy. See if I can speed it up here, by the way.
Another thing we've talked about, which I think is a fascinating topic, is the power of the mind to your and reality by thinking about it, by manifesting it into being. What do you think?
There are many explanations why it works. One thing most people agree on is that setting goals and staying positive and confident does allow you to achieve the things you want to achieve. It's very hard to believe, though, that you can just manifest things into being without applying effort in the direction that seems to be logical. Maybe some people exist that can just sit on the bank of a river and materialize things by the power of their thought. But I'm not sure I'm one of these people. I always found it more easy to believe that if you couple this optimism and faith with logical action, then it is bound to be successful.
Prolonged effort, hard work, coupled with positive, focused thinking about the thing.
Oh, yes, over many, many, many days. It is possible to imagine our world as a high dimensional universe where humans have the ability to navigate through it with the power of belief, which is coupled with positive emotion and logical thinking. But we are getting into an esoteric realm. We don't have any proof of that. But we also know that we probably, at this point, haven't discovered even 1% about this universe.
I agree with you fully, and I like what you said in the way you were thinking about it. You've told me before that maybe there's a way that with effort and with a focused mind, you can morph the sort of landscape of probabilities around you. And it's a nice way to visualize it, that somehow our effort and our focus changes the things that are likely and less likely. And by focusing on it, we make the thing more and more likely, at least as an estimate, as a kind of field that we, through our thoughts and through our actions, change that field. And then there's 8 billion of us doing so. And together, there's this collective intelligence that creates the world we see around us, like the mice. And like you said, us as a humanity together are perfect. I like that you said that.
I admire your belief in the fact that we get to experience this together because it's not obvious. Maybe each of us experiences his own or her own universe. And maybe every second the universe splits into a billion of different universes, and everything that can happen happens. And there is a universe where, say, I died in 2013. Maybe every time I die, I actually get to shift to a parallel universe when I don't die. And then it keeps going. And at a certain point, we achieve this quantum immortality when we're 1,000 years old. But a lot of people from other versions of reality think we are long gone.
Yeah, this is something you explained to me, the idea of quantum immortality, which is a thought experiment, which I find deeply fascinating. People should look into it, which is very crisp, clean consequence of the many worlds interpretation of quantum mechanics, that we as conscious beings can't experience our death. We can only, as we branch into these many worlds, only the living consciousnesses get to experience it. So in some sense, yeah, there's many universes. If we're to seriously take the many worlds interpretation of quantum mechanics, there's many universes where you died many times, especially you. And I'm glad we're in a universe where we get to share the table with this impressive bone, a little humor, and a lot of serious topics covered today. Once again, I can't say enough. A giant thank you from me, and a giant thank you from hundreds of millions of people that follow your work, for you fighting for the freedom of all of us to speak and creating a platform where we can do so. And thank you so much for talking today, brother. It's been an honor getting to know you and to call you a friend.
Thank you for saying that. I'm also incredibly grateful to you and to the fact that I happen to be in this version of reality when I haven't died, at least yet, and hopefully we'll get to spend more fun moments in the years to come together.
Thank you, brother.
So, yes, ladies and gentlemen, you are listening to the Insomnia Podcast, and we are live with, it seems like, Dallas, very, very slow internet today. I'm not sure what's going on X. Let's see if I can get that page back up. There you go. I just posted that I'm going live, so let's see what we can get from this. Oh, I've got my live cast playing in the background. There you go. So yeah, ladies and gentlemen, I just want to show you some of the tweets that I put out on X just a few days ago throughout this war. And so this was a few days ago on March 6th. I said, martinis on me. If oil is not at $100 a barrel by next week, maybe Trump will make us rich. It seems like that's happening. So I think some of you need to buy me a martini. Here's traders falling in love with oil last week. This was, of course, March 6th. These are the traders on the floor here.
I know you're everything that I've been looking for. And I look into your eyes and could not ask for more.
So it's only fair to lay it on the line. Hold on, I'm gonna need a little time.
But if I ever fall in love again,
sometime when this broken heart can mend,
I know it's gonna be with you. You're the one to pull me through, though I don't know when. If I ever fall in love again.
So, joking aside, guys, it is going to be a very interesting week on Wall Street tomorrow. And again, I would watch Oxy very closely. The administration may indeed have something up their sleeves to forestall the precipitous rising, even more than already has, of oil prices, but they can't keep that going forever. And indeed, I hope it goes down so that I can buy some more, guys, some Oxy and also some ETFs in oil. Now, I would watch closely gold and silver prices because they're still not hardly reacting at all. And that's because the inflationary pressures, well, beyond what's already going on, and there's already just been massive inflation. Actually, if you talk about from the Austrian economic point of view, from the point of view of printing money, and there's more to come. There's a lot more to come, if nothing else, to finance our escapades. So gold and silver are, as sure as anything is sure, guys, gold and silver are sure to go up. And in a few months, you'll be looking at this as a new low, as a new support. So buying physical gold and silver, again, here's another little piece of wisdom. Again, it's not advice because I'm not an investment advisor, but pay off as much debt as you need to pay off, but no more. Everyone says pay off your debts, but you have to, if you're in a lot of debt especially, you have to look at your debt and see which ones of them are actually exigent, which ones of them are actually going to get you into a lot of trouble. If there are some that are going to get you into a lot of trouble right now, make it a priority to pay those off. But if there are some that it really doesn't matter and your credit is already affected by them, I would leave them alone for a little while. Why? Because as the money supply inflates more and as prices go up more, you still owe the same amount of money as you owed. So that same amount of money is going to be worth less. And your pay will eventually go up to reflect those prices of inflation. So I'd say the further in the future that you can pay those debts right now in an inflationary environment, the better. Of course, this advice works the opposite way in a deflationary environment. Believe it or not, there are economists that are afraid of deflation, which means they think it's a bad thing that you would pay less for a car next year than you paid this year. I don't think those economists are speaking about that anymore. So, guys, real things, commodities, gold, silver, and then we can strategize about trends. We can strategize about some big bets that I'm thinking about taking, but right now I just want to sit on the sidelines and see where all of this is going. I'm with Tucker Carlson. I'm praying for peace. I'm praying that we can come to our senses and make some kind of deal and forestall some of the worst circumstances that could come from this. But in the meantime, I'm not panicking. I am positioning myself to be able to benefit from an unfortunate situation. So guys, thanks so much for visiting me here and watching me live on the Insomnia Podcast. We're going to try to do one of these at least twice a week, and we will see where the markets are going. We'll see what I'm doing in the markets. If you have any opinions, please do comment and let me know. So until very soon, guys, this is Javier Novoa with The Libertarian Investor. Thank you for watching the Insomnia Podcast. And that's a wrap, ladies and gentlemen.